of broadcast excellence. It is possible that we were talking about the subprime mortgage crisis as far back as 1998, because I remember Janet Reno, who was the Attorney General at the time, threatening banks with investigations if they didn't make these loans. Now, Investors.com today, Investors Business Daily, has editorial, smoking gun document ties policy to housing crisis. Now, they act like it's new, and it is to them, but I'm just going to admit to you, it gets frustrating sometimes being on the lead of this stuff. It really gets frustrating being years ahead of people, because when you're years ahead, they ought to catch up years ago. Anyway, I'm not ripping Investors Business Daily. Don't misunderstand. This is just a generic thing. President Obama says the Occupy Wall Street protests show a broad-based frustration among Americans with the financial sector, which continues to kick against regulatory reforms 3 years after the financial crisis. Obama complained earlier this month you're seeing some of the same people who acted irresponsibly trying to fight efforts to crack down on the abusive practices that got us into this in the first place. Well, what if the government encouraged or even intended those abusive practices? Well, you and I know, because you listen here every day, that they did. You know that it was Jimmy Carter that started it. You know that it was Bill Clinton that really ratcheted it up. And you know that it was Barney Frank and Chris Dodd and a number of other Democrats throughout the 2000s, which kept this program alive under the whole concept of affordable housing. We must make sure that people who can afford houses are in houses. It's only fair, as Barney would say. So we rewind to 1994. That year, the federal government declared war on an enemy, the racist lender, who officials claimed was to blame for differences in homeownership rates, and launched what would prove the costliest social crusade in U.S. history. At President Clinton's direction, no fewer than 10 federal agencies issued a chilling ultimatum to banks and mortgage lenders to ease credit for lower-income minorities or face investigations for lending discrimination and suffer the related adverse publicity. They also were threatened with denial of access to the all-important secondary mortgage market and stiff fines. The threat was codified, a 20-page policy statement on discrimination in lending, and entered into the Federal Register on April 15, 1994, by the Interagency Task Force on Fair Lending. Bill Clinton set up the little-known body to coordinate an unprecedented crackdown on alleged bank redlining. This edict, completely overlooked by the Financial Crisis Inquiry Commission and the mainstream media, but not us, was signed by then HUD Secretary Henry Cisneros, Attorney General Janet El Reno, the Comptroller of the Currency Eugene Ludwig, and Federal Reserve Chairman Alan Greenspan, along with the heads of 6 other financial regulatory agencies. The agencies will not tolerate lending discrimination in any form, the document warned financial institutions. Ludwig, at the time, stated the ruling would be used by the agencies as a fair lending enforcement tool and would apply to all lenders, including banks and thrifts, credit unions, mortgage brokers, and finance companies. The unusual full-court press was predicated on a Boston Fed study showing mortgage lenders rejecting blacks and Hispanics in greater proportion than whites. The author of the 1992 study, hired by the Clinton White House, claimed it was racial discrimination, but it was simply good underwriting. There was no problem. People were not lending money to people who couldn't pay it back. This was called discrimination. This was called redlining. This was called all kinds of horrible racist stuff. And so the pressure was on, starting in 94 through 98, the Clinton years, to start making these loans. And it's been that way since the get-go. And even now, Occupy Wall Street, all of this, everything that's happened since the subprime mortgage crisis became known to the general public, everything has been about redirecting blame at Wall Street, at the banks, when in fact the blame is going right to the Democrat Party when they ran the federal government. Now, the thing is, we've known this for years. So here now they've got the official smoking gun document which proves it. But this is not the only document that's out there. This stuff has been, I didn't learn this from any back channels. This was all happening at the moment. We talked about it while it was happening. Throughout the 2000s, even in the late 90s when Janet El Reno was making all of these threats. No, I'm just saying it gets frustrating. Have the goods on this stuff, and nobody pays attention to it. Which leads me to believe everybody involved here knew it anyway. This is all part of the establishment. I don't care what party they're in. It's all part of the establishment trying to shift blame away from themselves and back onto Wall Street. One of the favorite whipping boys, because everybody knows at the end of the day, the establishment's in bed with Wall Street anyway. And part of the deal is you take the public flogging and you take the abuse, and we'll shut down one of your houses now and then, but we'll see to it you still get to keep your house in the Hamptons. Well, that's what it is. Look at this. Jim Garrity, National Review campaign spot. Former New Jersey Governor John Corzine, who before that ran Goldman Sachs. Started when he left the governorship a company called MF Global Holdings, a futures brokerage. Well, MF Global Holdings, LTD, run by John Corzine, was suspended from conducting new business with the New York Federal Reserve today after posting a record loss. The firm's board met through the weekend in New York to consider options, including a sale to avert failure, according to a person with direct knowledge of the situation. Here's a guy living off of his fame at Goldman Sachs, goes to the United States Senate, participates in vote after vote after vote for deficit spending, then becomes governor of New Jersey. And it's as if everybody has forgotten that this is the guy who left a record $8 billion budget deficit as governor of New Jersey. And so now he's done the same thing to his own firm, MF Global Holdings. As recently as August, there was speculation that Obama would name Corzine as next Treasury Secretary. I'll tell you, it's a den of thieves, certainly. It is just a den of thieves. Daily Caller. There's a couple stories with this theme. Experts begin to doubt Obama's re-electability. Where is the evidence that Obama can win the 2012 election? Where's the evidence that swing voters even want to listen to him? Barack Obama polls below 50% in every state that matters. You couple that with only 16% of the people who think the country's on the right track. And those people are the losers that make up part of the Democrat Party base. You combine those two numbers, and it looks bleak for the Bamster. The economy is stalled. Unemployment's much higher than the official number, 9%. Hispanics and African Americans disappointed. The president's approval numbers have tanked. The right track, wrong track number fell off the cliff in the summer. It's now 16% who think it's on the right track. Obama has reached the stage of political doom when voters' disappointment's so deep that they just don't want to listen to him, talk about him, or watch him, said David Hill, a veteran Republican strategist and pollster, in an interview with the Daily Caller. This guy says a tipping point might have been reached in August when the monthly jobs report showed 0 new jobs. With George W. Bush, it happened sometime in 2006 after Katrina and the 2005 Iraq situation. And even Obama-friendly experts are close to dismissing him now, according to this story. And there's a Dick Durbin is also in the news at the same website, the Daily Caller. That's Chatsworth Osborne Jr.'s website, right? The Daily Caller. Illinois Democrat Senator Dick Durbin told the Chicago Tribune that if the 2012 election is a referendum on Obama, then Democrats are in trouble. So there's a theme. Obama's not electable. Starting to just appear ever so slightly. Just starting to effervesce as a matter of panic and concern. And then there's this from the Business Insider. Goldman Sachs Analyst Index does not reflect the modest cheer that people are feeling about the economy. You remember this past week when the gross domestic product came in at 2.5% and everybody was going out there having a party? And you remember that Il Rushmo, was telling you, where is it? Can somebody show me this 2.5%? Well, don't get too excited. From Goldman Sachs, Xuan Wu. The Goldman Sachs own index fell 0.9 points in September, the third straight decline since July, the second straight month that the headline index is registered below the 50 mark. Declines in the headline index contrast with the small improvement in the September ISM manufacturing report. And anyway, the bottom line here is that Goldman Sachs is telling their people, the economy is actually weak and it got worse in October. It didn't grow. That's what all these numbers add up to. That's what the story is all about. It's written very technically, but the essence of it is that the economy is weak and got worse. There wasn't any big growth. And see, everybody knows this. Everybody alive, everybody living it knows it.